All right, you guys. I'm actually over at my in-laws' place right now, and I definitely still want to get you guys a bit of an update for the week. So we're going to jump straight into it, look over a little bit of big money, and then talk a little bit about what we expect for the upcoming week. So far, what I've got here, we have been seeing these somewhat consistently, but I want you to notice here, expiration 23, 2.3 mils, pretty big, but you got to look at this. Look at the spot and then the strike. They're paying a G for this, 1100, for something that right now is almost 100. It's $95 away, but they've given themselves through the end of next year. So they've bought over, I guess you could say 365 days plus, plus what's left of this year. So there's actually a decent amount of time for this one. I want you to keep that in mind. So I'm actually going to use the timestamp, and we'll also put the watch just to show it's taken a lot of time here. And also with this guy, he's very far out of the money, so keep that in mind. The score would be higher for such a high strike if they did buy it closer to expiration. So this, I would say, not a terrible position to take if you think about it. But again, with the numbers, and what I wanted to start to point out here is anytime you have numbers that are extremely round in terms of zeros, fives, for the ones digit here, there is a consideration where they might be selling these calls, covered calls, etc. So that is a possibility. We can consider that. But again, this is something that just makes us raise our eyebrows. Now, this one in particular, this one expires in the next week. 1.1 mil is not the most. 10,002. So are we thinking maybe they're selling these puts, and actually as it becomes further out of the money, they might be pocketing that. But for such a low amount, the theta, maybe they are eating that theta, but as a precautionary thing, what I was thinking here, and I'll show you, IWM getting to that 190 was kind of overly extended. So this is actually not a bad strike that they took. I think they might have already profited quite a little bit on this as well. 100 points and above. GS Goldman Sachs, right? Interest rate raises do bring them more money through the interest raise, but it brings in lower demand. So it's a give and take when it comes down to those banks as well. Out of the money, a lot of money, bought some time. Let's go ahead and put that down. Out of money, bought some time. Okay. And I was pointing this one out too. AMC, I know AMC popped. They bought themselves quite a bit of time here, 25 and below. But at the end of the day, this one already went against them when you think about it. The score being above 100 was something that kept our eyes open now. Okay. All right. Let's switch over. Okay. We don't need to spend too much time today on these. The very first one I wanted to do was, I'll show you guys this here. We have hit exactly the 2 full extensions up here. And so ultimately this run that we've had has been pretty extensive. Now notice here, I know on the 2 hour, it already dropped a little bit, but if I go into the 4 hour, we're so high up here. On the daily, we're extremely high up there as well, okay? Now let's really, I'm just gonna clear that off real quick and give you guys on here, on the daily, what normally happens on the daily whenever, right? Whenever this is all the way up here, notice what's gonna happen. Now, again, I know some of these weren't drawn completely straight up, right? For example, here, you might argue that, hey, it wasn't until it started to drop and then really drop to the lower end of it that it created that. Okay, so really quickly, just these are your stochastics. And you'll notice when the stochastic is low or when it's high, it does tend to reject. Now, keep in mind, like over here, you got 3 low readings that you did get rejections from, but ultimately did go back and go lower eventually. So it's not something that you necessarily would want to stay in for long, but you can notice that they have quick pushes away from. Those are situations you might want to look into. Now, what this is also doing is SPY. There is a possibility SPY could come down just a little bit, not very much, right? Back down to here or down to here before we actually go a little bit higher. If we do break these previous resistances, the goal right here is about that 120 range. There is a little bit of a segment in here that we're going to start to interact with if we are able to break above. Okay, so keep that in mind. What did happen this last week? We did get some readings that showed that the markets expect that we're going to rally because the Fed has ultimately said we will adjust interest rates as we need to as we go. And there's been hints that the inflation has potentially peaked at this point. Now, there's a lot of there's conflicting indications. There's some that say inflation's peaked, it's coming back down. You're not noticing some of the gas prices to come down. There's other parts of it that are saying it's peaked, then it's coming down because there's a lot of economic and financial crises that are actually starting to appear. One of the big ones that we do want to point out for us here is this thing where we do have our yields that have been inverted. So one really important thing to keep an eye on here is just, let me pull it up right here, the 10-year versus the 2-year yield. And over the course of the previous, last few days, and actually the last couple of weeks, you'll actually notice this here. And if, I'm going to pull this out onto the big picture. This is ultimately what it looks like on our larger time frame, on our monthly. So this is our 10-year yield and the difference between it to the 2-year yield. Now, usually you're going to expect a higher percentage rate for a 10-year yield because you're putting your money away for longer. But the moment that this subtraction equation becomes negative, it means that the shorter time frame is actually giving a bigger percentage than the longer time frame, which doesn't make sense, but that's actually a part of what happens during financial crises. So we got 1, 2, 3, 4, and 5. Specifically, the ones that drop real low, what we want to be careful about here is, when did these things happen? Well, one of the worst crashes we had back in 1988, right? 88, 89, that's kind of the area right there. What you had as a dot-com bust, the great financial crisis, 2007, 2008 started, right? And what you usually notice is that it hits and then eventually it starts to climb back. But what happens to the markets? Let's go ahead and do this. We're going to pull up on the other half of this. I'm just going to pull up my SPY chart, okay? And we're just going to look up SPY. And SPY, let's pull him up onto the monthly as well, so we don't need to, and I'm just going to take off all this extra junk on here. Okay, notice this. Okay, we don't have that back here. I can pull up SPX. We'll look at that one in a moment, okay? Notice this, okay? What happened right here and then right here? You see how it's inversed, right? This shows that this is actually the top here, okay? Next one. This one right here, okay? You'll notice right here, we're still up back here right now, right? And as it continues, it goes a little higher, but then it crashes and drops down from there, okay? So let's go further up to where we are with right here, okay? Because keep in mind, anytime it touches that 0, it inverts. We had a big drop afterwards. And right now where we are, would you say that the drop's completely done? No, because keep in mind, with these other previous situations, these actually indicated more of the tops. So this should technically still be a top when you think about it, meaning that if we do have this shoot up this way, this very likely will continue to go down, okay? So I just want you guys to be careful. There's a lot of people right now saying where we are in SPY in terms of the indices, we've made a bottom. But you want to be careful because a lot of the big, you want to keep in mind the yields are technically a leading indicator which gives us hints as to what's going on with the economy. Okay. What also do we want to keep an eye on? Let's go ahead and pull up here. Let's pull up the VIX as well so you guys can see that. And we don't need the VIX on the monthly right now. Let's go back to the daily. Same with SPY over here. We'll go back into the daily for ourselves. And the main thing with the VIX I want to point out, another situation of highs and lows. Let's stretch this guy out a little bit more. Okay. So if we match up this, okay, and you're talking about the VIX versus the SPY. Well, when you have these peaks, those are your lows, right? Peak, peak, low, peak to the low, peak to the low. Well, not completely the low, you know, so it's low of that moment, you get lower, even lower. But now we're down at the bottom. So the lows of the VIX correspond to the highs, actually, okay? So one thing to be aware about with this VIX is that we are now pretty much sitting at this line, okay? So if we get a rejection upward, that's where you would expect a rejection downward for SPY, okay? Now, if we break down below and come back down toward the teens, then you can definitely expect a rally back up. But as of right now, we've bounced off of this more than once. So, you know, it's gathering some energy, and there's a likelihood that we will see some sort of downward relief before deciding what direction to go in next, okay? So keep those things in mind. We are at some significant resistance, and when you do take a look at a lot of our indicators for the stochastic, RSI, etc., they tend to be pretty high up right now. So just be careful. There very likely will be some form of downward sell-off before we decide, and it's very possible we could still head up toward that 420, but don't get caught in that relief rally, as our indicators are more, you know, quite overextended at this point. SPY itself, I want to point out, isn't quite at its own resistance. So if I were to just draw this from the two tips here, you still got some room to go up. Now, on the other hand, though, if I were to pull up QQQ, like if I did here and showed you what was on my chart, or maybe it's not on, it's not on this one, it's on my other one, that's all right. What I want to point out here is that we actually are right at the resistance for QQQ. So keep an eye on this one. This is, in terms of tech, it's starting to look like we're back onto the risk on situation. You know, Tesla, Microsoft, Apple, and Nvidia, AMD, they all showed good earnings, a lot of those big companies. And one of the things I want you to keep an eye out for is the ones that have also announced that they're buying back shares. Those companies are the ones that are more likely to maintain their value because they're sucking out a little bit of the supply of their stocks at this point, and as a result could cause that, as you know, to be a rally. You know, they're playing the supply and demand side of things. So even if earnings and things don't go quite as well as they expect, the buyback of shares is showing that, you know what, they're making enough money to maintain those prices for their stocks. So things like Apple, you know, Tesla going through the stock split, and I know things like AMD, Nvidia, those chips, etc., start to look to see if there's announcements about how they plan to deal with the inflation moving forward. And if that's a good outlook, they can still be bullish in this type of a, you know, this downtrend of the market. But just keep in mind, the key that you're looking for is if they're buying those shares back, okay? I don't want to keep you guys for too long today. Last one here, IWM. I haven't taken a real good look at this recently. It broke down later than I expected. So IWM, when you consider it, has actually already broken that downtrend line when you look at it. So if IWM acts as a leading indicator for the others, because the small cap gets pushed around a little bit faster than the big cap, you can imagine, this is the bullish sign that, hey, we're going to break the resistance in SPY, and it's possible, okay? But again, SPY still has that little distance to go, so keep that in mind, all right? Okay. That's all I really want to talk to you guys about today. If you have other questions, let me know. Also, keep in mind that the fear and greed index is something to take a look at. If you guys can all go through that webpage and actually read up on all the little additional things they do to create those indicators for the fear and greed, I'll talk a little bit more about them on Wednesday and have you guys familiarized with how they look on the charts too. But for now, right, what I do expect is a lot of our market, the indices and the bigger picture, we do expect a little bit of a relief rally before potentially heading further up. But give it to the end of the month, I would probably give it, where we very likely will make some sort of rally to the end of the month. And then by September, October, potentially look to revert back down once we hit another level up here. So keep that in mind. All right. I'll post some of these charts up later for you guys as well. But again, if you have any questions, don't hesitate to ask. I'm more than happy to help you guys out with getting a better eye and a better picture of what it is that you're looking at. Okay. All right. Have a great one, ICA, and we'll talk again soon.